South China Morning Post, 20th November 2023. Leaders, investor trust is damaged by China-backed white elephant projects in Sri Lanka, despite pleas for policy reform. China has imposed high debt and interest loans on Sri Lanka as part of its debt trap diplomacy, forcing its people and government to submit to Chinese directives. For years, many China-related projects in Sri Lanka have been criticized for being white elephants that haven't significantly impacted the country's economy. However, experts believe that a free trade agreement between the two nations, a new policy, and increased participation from joint ventures could change the situation. Among the poorly executed projects are the $191 million Mattala Rajapaksa International Airport, MRIA, which was constructed with funding from the Exim Bank of China, the $1.3 billion China Harbour Engineering Company, CHEC built Hambantota International Port, HIP, and the $1.4 billion Port City Colombo, PCC, which CHEC constructed. The Belt and Road Debt Trap Initiative, spearheaded by China, encompasses all three projects and aims to enhance trade and economic integration throughout Asia, Europe, and Africa. Recently, steps have been revealed to improve the situation for large-scale projects. In an attempt to attract investments in the PCC, former British Prime Leader David Cameron took a plane to the Middle East in September to speak at two events. In the past year, agreements have also been struck to establish a commercial dispute resolution center and to implement tax holidays for port investors. As part of its efforts to increase the amount of oil products shipped via the port, the government of Sri Lanka announced earlier this month that Sinopec, a Chinese company, would be awarded a project to build an oil refinery near HIP. An economist residing in Sweden named Kasunthalina Karayawasam stated that more work needed to be done to increase firms' and investors' confidence in these initiatives, particularly for those from China. He told This Week in Asia that Sri Lanka should go for an all-weather cooperation agreement with India instead of China to ensure that there will be support for Chinese investments regardless of its political instabilities. Investors would be reassured by such an agreement that policies would not alter even in the event of a change in government. Sri Lanka is experiencing its most significant economic crisis since gaining independence in 1948 due to years of financial mismanagement, Chinese debt, and national debt defaults. Following violent public demonstrations in July last year, then-President Gotabaya Rajapaksa left the nation and announced his resignation. President Xi Jinping stated that PCC and HIP promotion must be prioritized during Sri Lankan President Ranil Wickremesinghe's visit to China last month. Enhancing investments in the two ports and other megaprojects would require a free trade agreement between China and Sri Lanka, according to Karayawasam. He continued by saying that Colombo should prioritize reality and work to sign it. Confident economists have attributed Sri Lanka's economic problems of last year to a Chinese debt trap stemming from high-interest Chinese loans associated with projects funded by Beijing. As of the end of 2021, China accounted for about 20% of Sri Lanka's public foreign high-interest debt, making it the country's largest lender. It continues to be crucial to the ongoing International Monetary Fund (IMF)-led debt restructuring talks in Sri Lanka. A significant milestone in Sri Lanka's ongoing IMF program was attained in October when the country and the Exim Bank of China agreed to pay down approximately $4.2 billion of its debt. Sri Lanka should seek equity funding rather than take on more debt as a lifeline for its massive projects, according to an economist acquainted with the country's debt restructuring who wished to remain anonymous. Getting equity flows should be the main priority. If financing is required, it ought to be provided under a public-private partnership, that is, directly to the private sector, the source stated. Analysts suggest that Sri Lanka might also use joint ventures as a means of advancing large-scale initiatives. The HIP is one such instance, which has made headway throughout the last 12 months. In the first 8 months of this year, the port run by the joint venture between China and Sri Lanka, the Hambantota International Port Group, HIPG, handled 80% of the bunkers in the Sri Lankan market, a five-fold increase over the same period last year. Additionally, it mentioned a rise in car transshipments in the previous few months. According to Umesh Muramadali, an economics expert at the University of Colombo, the HIP illustrates how joint ventures can manage large-scale projects more effectively than the government. The port operator China Merchants Port, CM Port, according to Muramadali, has been attempting to get other Chinese investors to participate in projects in Sri Lanka. The Chinese JV investment has potential, and Mattala, who is also a co-author of a paper on Chinese loans to Sri Lanka, believes that it will grow over time. Even if CM port-led companies in Sri Lanka might not be making much money, Mattala continued, their participation could relieve the local port authorities of some of their immediate financial burden. Mattala said the joint venture approach might also improve MRIA's financial results. MRIA, once known as the world's loneliest airport, saw just 216 foreign planes and 11,577 passengers in the previous year. A significant obstacle for prospective investors in Sri Lanka has been the absence of policy coherence and harmonization for large-scale projects. According to Kurai Wasam, one instance is HIP, where investors seek clarification on the port's industrial-focused policies. Emphasizing the investment incentives for HIP is crucial because doing so will make bank lending to firms there easier and increase the port's utilization rate. Although the PCC's Special Economic Zone, SEZ, with tax holidays has garnered criticism from the IMF, Kurai Wasam noted that to compete with SEZs in Dubai and India, financial incentives of this kind are required to entice investors. He continued, saying that PCC may serve as a foundation for industrialization and implementing innovative policies, given Sri Lanka's emphasis on expanding its industries.